Hi, let's have a look at Dogecoin and let's do technical analysis on Dogecoin because there seems to be some kind of momentum shift happening right now. And one might argue that TA, technical analysis, doesn't work at all on something like Dogecoin because in the end it's just influenced by, does Elon Musk tweet about it? Are there any kind of news coming out for it? But one might also flip this argument around and say, simply because there is not so much technical fundamentals behind it, it's mainly psychology that drives the price for Dogecoin. And so what we will look at in this video is a backtest I've done a while back on the Dogecoin price. What kind of moving average works the best for Dogecoin? And so the idea of a moving average trading strategy is that you are always in the market whenever the price moves above the moving average, right? So here in gray, we've got the portfolio line. Here in white, we've got the underlying. And whenever the price is below the moving average, which is here in purple, then our portfolio line is completely flat. We are completely in cash. And then once momentum turns bullish and the price is above the moving average, we follow the asset. And the idea behind this strategy is simply that we try to avoid those bear markets, right? We try to only be in the asset when there's some kind of hype happening around the asset. And so when you follow such a strategy, the question is always, what kind of moving average works best for a particular asset, right? This is now the example here with the 360-day simple moving average. But one might argue that maybe we should take a moving average that's not that long, that's a bit closer. So we would exit the market earlier when momentum turns around, and we would enter earlier once prices start to rise again. And so you can do a backtest of that trading strategy and you can find out what moving average duration works the best. And so I've done that for Dogecoin quite a while back. I have looked at the price history of 2017, middle of 2017 to the middle of last year. So those moving averages, the best moving averages from this result are not retrofitted to recent data. These are results that are already almost 1 year of age. And so we are not running the danger of just finding an average that in theory might have worked, right? This is something where we could potentially also make a backtest on how do those perfect moving averages that we are about to look at now, how have those performed in the last year? So first of all, we have to look at Dogecoin on a logarithmic scale, right? This here is a linear scale, a linear price scale. So each horizontal line from here is half a cent. But when we look at such a chart, the issue is that we can't see a lot of price action in the early days. So you want to look at a logarithmic scale where each horizontal line is a 10x. So it's not the static price difference that changes here, it's a factor that changes. And so we can see the maximum drawdown for Dogecoin was 79% during this period over here. But when we trade according to the moving average, we have already seen we reduce this maximum drawdown somewhat, right? So we exit the market once prices tend to decline. And so the maximum we can fall from the top to the bottom is less compared to just buying and holding the asset over the long term. And so this is the result of the maximum drawdown of certain moving averages. So I've backtested all moving averages from the 2-day all the way up to the 360-day. And on the y-axis over here, we can see the maximum drawdown for each of those moving averages. In white, we see the buy and hold line. So trading according to the moving average for Dogecoin would have given us, in any case, less drawdown risk, right? Less risk from the top of our portfolio line to the bottom. But what you're really interested in is the performance, right? How much trading performance would we have gotten? And again, in white, we've got buying and holding. So during this period, Dogecoin would have given us an annualized performance of 365%. But when we look at these 2 points over here, what are these moving average durations? That's the 64-day moving average and the 42-day moving average. So those two work the best. This is how this looks in practice. So we would have exited the market. Here in blue, we've got the portfolio line, and in white is the price. And so we tend to fall less than just buying and holding. And we also tend to outperform. This difference here might not look as much, right? It doesn't look like this is a lot of performance difference. But remember, this is a logarithmic scale, right? This delta over here is the difference between 540% per annum and 365% per annum. So that's the result of the backtest. And so let's look at Dogecoin right now with exactly those two moving averages, the 64-day and the 42-day moving average. And this is what it looks like currently. We are pretty much flirting with getting into bullish territory again. We have tested this before, right? But the clearly bearish momentum seems to have stalled somewhat. And what's particularly interesting is when we look at the relative performance of Dogecoin to Ethereum. One could look at Dogecoin versus Bitcoin or Dogecoin versus Ethereum. Let's look at the Ethereum chart. And this looks way nicer, right? We have been in this continuous bleed, but since beginning of the year basically, or middle of December of last year, we are beating Ethereum. Now, I'm not saying that you have to rush into Dogecoin right now, right? This is an incredibly risky thing. And the price also tends to move in these sharp movements. But if you're the kind of person that tends to buy meme coins, I don't. But if you like to speculate on those, you rather want to buy once the price has somewhat stabilized than during a time where Dogecoin is losing versus the major players, right? When we look at this in the past, when the price was bleeding, was continuously underperforming Ethereum, you didn't have a good time. But once this stabilizes somewhat, once the price bleed stops, people are more willing to take on risk. And that's when potentially, not saying this has to happen, but when potentially positive news can drive the price up again. But of course, there always need to be some kind of driver that pushes this up, right? But if you're already not losing versus Ethereum, then one might argue that on the short term, Dogecoin might not even be more risky than Ethereum. Now, what's always important for the US dollar valuation is how all of crypto is doing, right? If Bitcoin is going down, if Ethereum is going down, then Dogecoin will have a hard time making a lot of gains too. And currently the momentum, both for Bitcoin and for Ethereum, doesn't look too great. So when you do a similar backtest for Bitcoin and Ethereum and you look at how is the price moving relative to the best moving averages, you find out that it's currently not a good time to be invested in crypto, at least short term. So the overall market might have a negative impact on Dogecoin as well. That being said, in relative terms, at least to Ethereum, we might be seeing some kind of a floor right now. Now, it doesn't make sense to look at Dogecoin without looking at Shiba Inu, right? These are two very closely related assets. They are similar in size. They've got somewhat of a similar community. Maybe they are competitors, one might argue. And so let's also look at Shiba Inu quickly. I don't have a backtest of the moving averages for that though. So this is the US dollar chart. And now here we've got the relative performance to Ethereum. A very similar picture. We are not bleeding anymore versus Ethereum. So of course, Ethereum might go down in US dollar terms and so might Shiba Inu, but it doesn't look like Shiba Inu is at least relatively underperforming right now. Most of the sell-off might have already happened because what often happens is you get a lot of hype around a meme coin, then the trading volume goes up, the price goes up. Once the trading volume goes down again, the price bleeds. But now we are at already a pretty low level in terms of trading volume. So the price bleed might be somewhat stagnant now, at least in relative terms to Bitcoin and Ethereum. Of course, we also need a metric for Shiba Inu in Dogecoins. So that's the relative performance here. And it does look like, interestingly enough, that Shiba Inu is bleeding somewhat versus Dogecoin. So one might either argue that we've got some kind of a down move here, or one might argue that this is a sideways trading range. I guess both kinds of explanations have some kind of validity to it here. So if you're asking me, what would I rather buy, right? I said I don't speculate with meme coins. I personally don't really have a preference here. It looks quite similar to me. The situation is very comparable. Trading volume is pretty low and the price movements relative to another are not very significant. Please give this video a like in case you enjoyed it, because it will help the channel grow. And of course, don't forget to subscribe. I publish videos regularly. Last but not least, we've also got a Telegram group. You can find that simply by searching for Bitcoin Strategy Channel within the Telegram app. Please be aware though, there are scammers impersonating me, so I will never message you directly, right? If somebody messages you directly on Telegram to invest into something or to buy something, that person is not me. That person is somebody who's scamming you out of something. So be aware. Once you get active with crypto and once you join various Telegram groups, better double and triple check, especially when people reach out to you. Thanks for watching and see you next time. Bye-bye.